Welcome back to another episode of Chuck's Corner, where we get real about what it takes to go from dreaming about home ownership to holding those keys in your hands. I am Vic Jagger, your host for today, and I'm joined by two experts, who are here to empower you with knowledge and clarity. We have Chuck, our trusted home owner or home buying expert, I should say. We've had some great conversations so far, a lot of information that we gave out. But you had to call a friend in, phone a friend.
I did need some help.
The more the merrier. I love it. But we have Barry Coleman from the National Foundation for Credit Counseling. How are you?
Doing wonderful. Thank you.
All right. Well, let's jump into it. So we're going to talk about getting started and getting ready for home ownership. When someone's thinking about buying their first home, Chuck, a lot of things could be going through their minds, but what conversations should they be having up front with themselves and with the lender?
It's good to be here, Vic. Good to see you again. But I didn't get my theme song, my jingle this time. So we're going to have to work on that before the next opportunity. But it's okay. I'm not going to hold you accountable this time. So we'll jump right into it. But I'm glad you said what conversation should they have with themselves.
Yeah.
Because that's the piece that's often overlooked or assumed to be okay. And that start with something as simple as, is now the right time for me? Where am I in my financial journey? Where am I in my home ownership journey? And then what are the needs of my family? You really have to separate also needs from wants, particularly in today's housing market with interest rates being a little higher and home prices being a little more escalated. Affordability is challenged. So what are those things that you have to have versus what you might like to have? And then think about those things. And then realistically, when it comes to meeting with your lender, be really upfront with what you're comfortable with. You don't have to accept a mortgage amount that you might be pre-approved for. You can accept what you're comfortable with. But more importantly, have a discussion like, how long am I going to be in this home? Is a fixed rate best for me, or is an adjustable rate better for me? What types of down payment options are available, and how much should I put down and make sure I'm still comfortable after closing with having some reserves? So those kinds of things you really need to just talk about, and they aren't things that always come up because most people run straight into, I saw something online at realestate.com and I'm going to go buy this house.
Yeah.
And you don't necessarily prepare yourself. So having those conversations earlier with yourself and the lender can help take some of the stress out of the process.
And I'm glad that you said that because, sometimes we kind of get ahead of ourselves, or we know that, we were told that we could qualify for $750,000, but we know we're not going to maintain that just because you were approved or pre-approved for that amount. You really have to think about the other costs associated with maintaining the home, not just that mortgage part. Just because you're approved for it doesn't mean that you have to go all the way in and get the whole $750. You might find a good little situation.
Right. But we also have to be honest with ourselves about our lifestyles.
Yeah,
there are things
exactly.
that the lender won't know about you that are like, maybe I go to the casino. Maybe I, do a bunch of cookouts every weekend and spend $400 or $500 buying, crabs and burgers and things for the family.
And click buy now all the time.
Whatever it is, exactly. Those things won't show up on your credit report, but they are influencing your cash flow. So again, be comfortable in your home, because buying the home is the short part of the process. Owning the home is the longer part. That's a 30, 40-year opportunity potentially. So
absolutely,
we want people to be sustainable homeowners.
Absolutely. So Barry, when it comes to getting financially ready, how early should someone be looking at their credit health before applying for a mortgage?
Yeah, that's really a great question. And I would say on average, 6 to 12 months, but it's really an individual situation. Those individuals that may have more credit challenges affecting them, it's going to take a bit longer. Those that have maintained positive credit over a longer period of time, they'll have a shorter time frame. I guess the best way to determine, though, is to seek the assistance of a housing counselor.
Yeah.
They will help you determine, when you're ready. They will guide you along the way. But short answer, it's an individual situation. It really is. Because everybody's finances are different.
And when it comes to your credit score, some people feel like, oh, I don't have enough credit, or, I don't have a 800 credit score, but that doesn't cancel you out of, your dream for home ownership either.
No, it doesn't. You don't have to have an 800, 850 credit score. But I will say this, the higher the credit score, the better terms you'll get, which will save you money over the long term. Your payment's going to be lower with a higher credit score. You're going to pay less, over the lifetime of the mortgage with a higher credit score. So it would behoove any consumer that's looking to purchase a home to try to achieve the best possible credit score for their own particular situation in order to save that way.
Yeah, and to really come up with a plan.
Right, and to that point, Barry, people don't have to wait till they're wanting to buy to come see an organization like yours, right?
Absolutely.
They can start well in advance.
Absolutely, and the earlier the better.
Yeah.
Because that way it gives you an opportunity to work on some things that will put you in a better position to be a successful homeowner. So it's never too early to go see a credit counselor to start that process. I mean, that way you're operating with knowledge. You're an informed buyer, you're an informed consumer, you know what to expect. So I would say the earlier the better.
And we love an informed buyer.
Absolutely, absolutely.
Chuck, we hear a lot about mortgage pre-approval. Can you just break down what it is and why it's such a game changer early on?
Sure. So there are two terms I'm going to use. There's a pre-approval and a pre-qualification. And people use them interchangeably in the industry. They're different. A pre-approval is something that's very basic. It's a loan officer sitting with you. You tell the loan officer your salary. You tell the loan officer what your credit looks like, or there may be a soft pull on the credit just to get a topical view. And they say it looks like you're qualified for X. That's a pre-qualification, just informal, us having a conversation, looking at topically at financial situation. A pre-qualification is where you actually go through an underwrite. An underwriter looks at your credit, an underwriter validates your income and your savings, and you get a letter from the bank that says you are qualified for a mortgage amount up to X. That's what the real estate agent wants to see before they take you out and about and show you all these properties. They want to make sure that you actually want to close. The real estate agent's not just out there having a good time driving you around.
Right.
And for your own peace of sanity, for your own comfort, to relieve the stress, but more importantly, to make a qualified offer, you want to have that pre-qualification so that the seller, the seller's agent, everybody knows you're good.
Yeah.
So you heard me say this, I think, in our first episode. Find your money before you find your house.
That's right.
So get that done. Get that pre-qualification early.
Okay, so we're talking about pre-qualification, pre-approval. Now, let's jump back to credit scores. Okay. Now, Barry, can you give us a few simple, actionable things that someone can do right now to improve their score? Because I know some people feel like, okay, I'm just going to go ahead and pay off everything, or maybe they're like, I'm not going to pay off anything. I'm just going to let it fall off. Or what are some things that will actually help to improve it?
Yeah, so, credit scores align with credit habits. And the most important factor when it comes to credit score is on-time payments. And when I say on-time payments, I mean any credit accounts that you have making at least the minimum monthly payment by the due date. That accounts for 35% of a consumer's credit score, the number one factor. So that's really, really important. So I would say consumers should begin focusing on making sure that they're making that at least a minimum monthly payment. Even more than a minimum is better. Yeah. But you want to make at least the minimum monthly payment by the due date every month. The second most important factor is the amount of debt that you have. So you want to focus on paying those balances down. If you can make more than a minimum monthly payment, you want to make more than a minimum monthly payment because that will get the balances down. So those two factors, your amount of minimum monthly payments, making those on-time payments, and the amount of debt account for 65% of the overall credit score. So those are the positive credit actions that you want to take to set yourself up to be in a position to improve your credit score over time.
Yeah, absolutely. So we know this process can feel overwhelming. There are so many different components, and we've talked about certain things. Oh, I got to go pre-approval. Oh, I have to make sure, my credit is on point. Oh, but where would I want to go? What's the process for this? All of the paperwork. Chuck, what do you tell buyers who are scared they don't know enough? I might miss something. Am I doing this correctly? And then, Barry, what do you say to people who are scared because they think that their finances may be a little too messy? Like, I don't know if this is attainable.
The process is daunting. It's not one that we do often. It's one that we've all have a friend that had a bad experience, and you hear about that bad experience and that negativity.
That first time.
Exactly right. So we are already apprehensive.
Yeah.
It's like going to the doctor. You're not sure what you're going to find out, but you know you got to tell them everything. That you don't want them to know some things, but you got to expose yourself. So embrace the fact that you know you're going to have to be open and honest and vulnerable during this process. But there are tools out there to help. Working with partnerships like, my friend Barry here, take some of that stress out of it. Yeah. If you work early enough through the education process, you'll eliminate those stress factors because the mortgage process is really a series of steps. Yeah. We know what those steps are. We know what it's going to take to be successful. The stress is magnified when we don't know or we don't take the actionable steps ahead of time to prepare for that. So I would tell people, understand it's going to be a little unnerving. It's your money, it's your shelter, it's your family's protection area. So that's naturally the emotional part of it. But sequentially, there's a process. There are tools, there are resources, there are partnerships to help you along the way.
Yeah.
And if you follow that roadmap, it really will help the process be a bit more predictable.
Yeah.
And that's really the role of housing counseling, to help to educate consumers about the process. So they go in informed, they know what to expect, they know what questions to ask the realtor, to ask the lender, to ask at closing, and then they can be confident in the decision that they make. And really that's what credit counselors do. They help to prepare someone for what they're facing in terms of buying a home.
And really, this is building a relationship with the people that you're working with in this process.
Sure.
Can you just touch a little bit on, Chuck, the importance, because you mentioned it earlier, but the importance of being honest and vulnerable, even if your credit might not be too pretty, your finances might not be really where you want. You really, this is a big step for a lot of people. So they don't want you in their business like that.
Right.
But talk about the importance of really being honest and putting it all on the table when it comes to the process.
I mean, you go into the process wanting a specific outcome. You want to get approved for the home. Mm-hmm. It just doesn't happen without putting all your cards on the table. Yeah. We're going to need to understand, what do your savings patterns look like? What do your spending habits look like? What does your credit look like? I mean, all these things are going to come out through the process. It's helpful to the lender up front if you really disclose. So if you have, a couple dollars, but you don't want to tell the bank you have it because you're afraid that something else may be down the road. No, those reserves are beneficial for us to know about because they help us in the case where there could be a concern that you don't have enough cash to close or you don't have reserves after closing, which some programs might require. So again, being upfront, providing all the information that's necessary, and being prepared to document it. So part of vulnerability says it's not just I trust you, but I have to verify. So you got to be able to provide statements. You've got to be able to provide documents to back up what it is. You may need tax returns if you're self-employed. You may need to show business licenses. So
I don't want them to know I just bought this refrigerator and this washer and dryer. No, you have to tell.
Well,
you have to
that point, I mean, you've seen this. There are people who will be in the pre-approval stage and then go make a purchase.
Right, a big purchase.
Don't buy a car or finance something major during your home buying journey.
Yeah.
Absolutely. Now you've gone from qualifying for that single family home to maybe you got to get a condo or a townhouse, something smaller or a smaller mortgage amount because you've done something. So again, being upfront and explaining, your lifestyle so that the lender can help you pick the right product and the right situation in terms that can make you a sustainable homeowner.
I've had settlement agents tell me that, individuals are about to close on a home. They come to the table to close. They run that credit report and see what they just purchased this $60,000 truck, and it's like, I'm sorry, we can't close, and it just blows up the deal. So
customers might think that once they got their pre-approval, you're going to stop looking at my
Sure.
credit. Not necessarily the case. And we also may do verification of your employment right before closing also.
That's right.
Make sure you still are employed. So consistency is key.
Well, Barry, what are some financial habits or mindsets that people need to shift when they are preparing?
Yeah, absolutely. So I would say first and foremost, shifting from a spending mindset to a savings mindset. Saving as much money as you can, because you're going to need it, if you're purchasing a home. You're going to need it for a down payment. You may need it for closing. And certainly after you close, you're going to need it to take care of unexpected things that might happen to the home. You have a plumbing issue you need to address. So you need to make sure that you have as much saved. And, switching from a spending mindset to a savings mindset can be difficult. But it's one of the things that credit counselors help consumers to work through. Developing that budget, knowing exactly where, every dime is going, so that how much you can put towards savings, I think it is really critical. So savings mindset, I think, is really important. And when you're making probably the biggest financial decision of your life, you need to save more and spend less.
Absolutely. Now, Chuck, what should a buyer consider when figuring out how much house they can realistically afford? Not just what they qualify for. Because remember, we talked about that earlier. Like, hold on, now you qualify for this, but realistically, what can you actually afford and maintain?
Well, a lot of the affordability comes also from what you're willing to invest in the purchase also.
Yeah.
So sales price may be $400,000, but if you're putting down 3%, that's one mortgage payment. But if you're using down payment assistance programs and other programs that will help reduce the principal, that will lower your payment. So when we talk about this holistic opportunity of knowing what you can buy and knowing how to go into the situation, working with our objective nonprofit partners, because they are objective. They're not compensated by the bank to steer customers there.
Yeah.
They will help you understand, are there programs in your market that are available to you? So Wells Fargo has the Dream Plan Home Mortgage, which provides $5,000 in closing cost assistance. We have a Home Buyer Access Grant, which provides $10,000 in down payment assistance. Knowing those programs are available in your market, or other programs from state and local government programs, will help you understand affordability. Then you can start to say, okay, what can I really afford? And then is that payment where I'm comfortable? Because I know what my lifestyle is. We talked about this earlier. I know I have these things that don't show up on my credit report that I do regularly, and I'm not going to stop. Let's be honest with ourselves.
Right.
The bank may approve you for a total, we call it PITI, principal, interest, tax, and insurance. So they may say you can qualify for $2,200. If you know you were struggling with a $1,900 rent payment, be honest with yourself and say, should I really go to $2,200, or should I find programs to help lower my payment, or should I look for a lower sales price? Because,
let's be real about it. Sometimes you get into a home and your mortgage payment, may be $1,700. But by the end of the year, they do a tax assessment, or your taxes went up. You don't have enough in your escrow to cover. So now you have an extra $50 and you may not be prepared for that. So now your mortgage has gone up. So those are some things that you have to keep in mind, when you're purchasing a home. And it's not like someone tells you that. Because the first time it happened to me, I said, no, hold on, wait a minute.
So it was that call I got that said, you said I had a fixed rate mortgage. I had a fixed rate mortgage. Why did my payment go up?
Why did my payment go
Your
up.
taxes go up. Your homeowner insurance can go up.
Yes.
Due to claims in your market. So those things the lender can't control.
Yeah.
But they are going to happen. So your mortgage payment will fluctuate because of those things.
Now, Barry, does the NFCC provide any tools or guidance for someone who's trying to figure out their monthly budget or their debt to income ratio?
Yes, absolutely. So we have a variety of financial tools on our website, nfcc.org. Consumers can go there. They can, access these tools and use them online. My recommendation, though, would be to make an appointment to sit down with a counselor that can help someone actually create that budget that's specific to them, can ask them certain questions to make sure that they're accounting for all of the items that are in their budget. That's really the role of the counselor. And I want to reiterate something that Chuck said earlier. The counselor is really working for that home buyer.
Yeah.
They're looking out for their best interests. They are the advisor to that consumer, just like someone would have a financial advisor or other types of advisor. A credit counselor, housing counselor is that advisor for that consumer. And I'd also like to mention that these counseling services are typically free of charge or at a very, very low cost. So it's something that would be accessible and available to any consumer that wanted to take advantage of it.
Yeah, and it's about taking that extra step to really making sure that you are informed, educated on the process. And, when we talk about resources and debt and reassurances, Chuck, for those who are juggling student loans over here and we got the car payments over here, how do lenders factor all of that into the mortgage process? Because they're not going anywhere. The student loan payments, we working on it.
Right. So when you look to buy a home, you're pre-qualified for the mortgage loan. There is a certain ratio that's used to determine your affordability. So they'll look at your total gross income, and then they look at your total debt expenditure. So your car loans, student loans, credit card payments, et cetera, et cetera, et cetera. They can only equal a certain percentage of your income.
Yeah.
The percent varies depending on the program, whether it's a conventional loan, whether it's you've got VA, you've got another set of parameters, or FHA, which are both through HUD. Those programs allow more flexibilities. So depending on the program will determine how much that debt, but all of those debts will count against you as it relates to being a prospective homeowner, meaning count against your income that'll help you qualify. So think about that when you think about the purchases you're going to make that year or so before you buy the home. If you're thinking about buying a home within the next year, think about that major purchase. Do I have to buy that car right now? Am I going to take on any heavy debt? The student loans, we know that can't go anywhere. That's in the past, and you have to deal with those to the degree you can get any any deferment, anything else, those things help. But also remember when you qualify for a home to be sharing any forms of income you have, because whether it's child support, alimony, those things that you typically don't think about as income, they count towards your income. So that's when we talk about being honest and share those things. If you have income from other sources, be sure you use that, even if it's part-time income. That helps to qualify for the mortgage. So those are things as a lender we look at to understand your debt ratio and your ability to repay the loan.
And that's what I was going to ask about. Like, what are, I guess, some things that a prospective home buyer could do to improve their chances? Like you said, like, do I get a part-time job? Are there things that can, Barry, that they could do that would hurt their credit as far as like, all right, well, I'm going to close all of these credit cards that I have, just so it could, I won't have to have all of them on there, but could that reflect negatively on their
absolutely.
part?
I think more importantly, paying down balances, not necessarily closing the card would be the best move for most consumers. But absolutely. They would not want to open up additional credit accounts, when they're working through the process. And again, I can't iterate this enough. Save as much as they possibly can. Work on making on-time monthly payments of at least the minimum monthly and then paying down debt balances.
Paying it down,
Yeah.
but not closing it
Not
out.
closing, pay down.
Yeah, that's
Yeah.
an important part that we don't talk about is one of the factors in credit. And since we're all family, I'll share some personal story
Sure.
with you. But I don't know that I learned early enough about financial literacy or financial planning. You typically learn when you make your mistake. And unfortunately for me, I learned early that I'm not a saver. I can't save. I still don't save well.
Yeah.
Right.
Even
That's
though I
right.
know better.
Yeah.
But you know what? I can invest. So there's a difference. So for me, I can't have it in my savings account tied to my checking account. It needs to be someplace else. That's
Yeah.
going to take me 3 or 4 days to get it if I have to. That way I know that money's not something, I need something new. I'll go buy it because of my savings
Right.
account. Yeah. And I learned that early, which helped me actually do much better with my savings because it wasn't just right there in liquid. So for those thinking about buying a home, maybe you have a dedicated home savings account. Don't tie it to your checking account so you see something on Amazon. You say, you know what, I'll take it from this account and I'll pay it back. Put it someplace else.
You don't have to talk about me like that.
That was my experience. I learned it's like, you got to get it away from yourself. 'Cause I know what my weaknesses are. And, that impulse shopping is one of them.
And that's a great tip for someone who's not a big saver, but to invest and allow your money to sit and appreciate
And you can buy
as it's
fractional
doing it.
shares today
Yeah.
through one of the many investment intermediaries. You don't have to have thousands of dollars. You can start with a couple $100s.
Yeah.
And it's important to be honest with yourself, like Chuck mentioned.
He's
You
like,
gotta
I know myself.
You gotta know who you are, and then use the right strategy to help you towards your goal.
Yeah. Chuck, are there any digital tools or online resources that you recommend for people who are trying to learn and plan on their own? Now, because that's where the process does start first. Like, okay, I want to take this leap. I'm not ready to call somebody right now, but can they go online and just look up the resources just to get things started?
There is a wealth of online resources. Sometimes there are too many out there because I think it can be confusing to consumers. So I would say, HUD provides resources. Wells Fargo, so www.wellsfargo.com/mortgage education is our website, totally dedicated to education. It's not trying to sell you a loan or anything. It's about how to get started in the home buying process.
Yeah.
And then working with partners like NFCC, HUD-approved counseling agencies, they have tools and resources also. And again, I've said early, work with an objective resource early, like Barry's organization, because they can help you with their resources. Together, our partnership, I think, is extremely powerful. We work with organizations like Barry's around the country, and Barry's with a national team. So wherever you are in the country, wherever you are listening to this, there's a resource in your city that can help you. But you have to start with that process. And while they're online tools, talk to a human. It's important to deal with a professional.
Because you have questions, and it's almost like, I'll equate it to, when you're not feeling well and you go and you look up your symptoms and you're Googling it and you're like, well, hold on, well, wait, they say my back spasms might actually be something else. And then you go and Google that. So you actually want to talk to somebody.
Stay off of WebMD, please. Stay off of WebMD.
Right. Like, I need to go to urgent care. Like, no, actually, talk to somebody and tell them. And so, Barry, for anyone who's listening or watching and afraid to ask for help, sometimes it's just hard for people to even ask for assistance. And they feel like home ownership is just out of their reach. What would you say to them?
I think it goes back to having that trusted advisor. Speak to a counselor
Who won't judge you.
Exactly.
Yeah.
I mean, we pride ourselves on being impartial, non-judgmental. We've seen consumers come in with all sorts of situations. So it's not like, we're seeing if someone comes in with damaged credit, it's not the first time that we've seen it.
Right.
And our goal is to help them to get past that. I mean, situations happen. People have circumstances sometimes that, may be caused because of their actions, but maybe caused by something outside their control. We understand that, and we're here to help. So, go to the website, nfcc.org, pick up the phone, call the NFCC, take that first step. I will guarantee you a consumer won't be sorry because they did that.
Yeah. And actually, you're going to speak to a real person. Absolutely. So it's not going to be like the system and representative. No, you will have someone to help you go through and start that process. Chuck, anything that you want our listeners to know, especially about, getting started and taking that first step?
Again, just make the decision. The worst thing you can do is be indecisive about what you want to do.
And wasting everybody's time with it too.
Right. Have a plan, have a path, have a partner, and activate.
Hold on. What are the 3 P's again, Chuck? Now have a plan,
a path, and a partner.
Yeah. The 3 P's.
There we go.
We're going to put that in. I know. You should, actually. And, if you are ready to take that first step, you can go to wellsfargo.com/mortgage education and nfcc.org. Chuck and Barry, this has been such an informative discussion. Actually, I'm ready to sign some people up myself. I'm like, yes, if we could hear, if people had a chance to hear how easy the process will be as long as you're honest, and it can be fun. We don't want it to be overwhelming for you, but it should be a fun process, and the end goal is always going to be worth it.
That's right. Invite us to the cookout.
Yeah.
Yes, that part. Invite us to the cookout. Thank you. This has been another episode of Chuck's Corner. I'm Vic Jagger, and